sentiment has been strong for large parts of this year. I think there's a lot of anticipation into in markets into continuing improving circumstances, and I think that is earnings in the US. So we see pretty strong earnings expectations for the year, about 10%. That is, and the market I think has anticipated that. I think in Europe, it's more about the growth picture. The earnings expectations are more modest, so it's more about the growth picture to pick up, and we've seen that. So that has supported markets, but markets have anticipated it strongly. So I think it has to come through, and any signal that it might be a bit more challenging, and that is inflation, monetary policy, especially in the US, maybe earnings and growth in Europe. You see markets hesitating on that and consolidating on those signals basically.
What do you do in terms of strategy now as we waited out for the first rate cuts? Because the chorus of voices seems to be you do not want to be out of this market, that you want to be invested and watching out for further upside from here. Is that what you're feeling that there is going to be more gains on equities for investors over the course of this year after what has already been a fairly decent start?
Yeah. Well, I think so. The pace will probably slow because of the strength that we've seen. So the further upside is probably limited, but you could also say, okay, what is going to bring markets down? And then I think the biggest risk in the US there is the overheating, and that risk is certainly bigger in the US than in Europe. So when you look at it from a market perspective, I think US equities look a bit more vulnerable than European equities. But also in the US, it's a pretty fine line for the Fed in the US between that overheating and a slowing economy. We have some of the data, macro data coming in weaker than expected, so we still see the economy slowing a little bit probably. And it's a fine line between that, and also for markets. But if the Fed finds that path in between, you could also argue, okay, what's going to bring markets down? They probably drift higher at a slower pace than we've seen so far this year.
Joost, this is very interesting because as you speak about the risk of overheating, is that easing off though stateside, considering the recent data we've gotten out, where it seems like there is a little bit of softness in some of the data now?
Yeah, the latest inflation data was at least not surprising to the upside, which we've seen in the previous releases. We see the consumer expectations last week for inflation coming down a little bit. Yes, so we think that inflation will moderate. We also think that the economy will moderate. The labor market is cooling. So that could bring back those perceptions for rate cuts. I think now there's hardly anything priced, only one rate cut for the end of the year, and nothing. It's really in December, so that's basically been priced out. There is a possibility that the economy slows enough and that those rate cut expectations come back. That would be supportive for markets as long as the economy holds up enough. So that's definitely a possibility, a scenario.